Good afternoon and welcome to BizTech's Asian Midday Market Watch. I'm Jeffery Halley with my co-host Samantha Voon. Our guest today on the 26th of March 2024 is Kian Soon, CEO of Astral Asset Management in Singapore. Kian Soon, as ever, welcome to the program.
Good afternoon.
Before we start, let's just have a look around stock markets across the region. Looks like a fairly quiet day once again as we head into the Easter holidays. The Nikkei 225 is down just 0.22%. In China, the Shanghai Composite has fallen by 0.47%. Hong Kong's Hang Seng is unchanged on the day, with the ASX 200 in Sydney down 0.38%. In South Korea, the Kospi has risen by 0.73%, while the STI in Singapore is actually up 0.85%, with Kuala Lumpur's KLSE unchanged on the day. Kian Soon, it looks like a fairly quiet week as we head into the Easter holidays. What do you make of today's market moves?
Definitely a quiet week with not much huge movements, as we see that the markets across Asia is pretty flattish, and it's going to be a short week this week.
Okay, so we see interest rate cuts were apparently cast in stone in the latest Fed Policy Committee announcement. What can we expect from this, Kian Soon?
So I think the markets generally like certainties, and last few weeks I think we have a couple of certain news being announced, as in the Fed assured the markets that they are on track for rate cuts on second half, and the frequency is going to be 3 times. That's rather specific, and the market sort of like that kind of certainty. And the second one, which the Bank of Japan, right, they have kept the whole market waiting, guessing whether they would reverse the negative rates environment in Japan, whether it was in March or in April, and this was announced, and everybody is assured now they are moving away from negative interest rates again. That created another form of assurance and certainty for the markets. As we can see, both S&P as well as Nikkei is enjoying all-time highs, and the markets have become pretty calm, and with a lot of certainties and news being cast in stone and done with.
Mm-hmm. So can we still see rallies in the S&P 500 and Nikkei going up?
I guess that's the $1 million questions. A lot of the expectations, and before you achieve an all-time high is people are waiting for you to get there. And once you're there, right, everybody is waiting, and say, would it go even higher? I guess that's the usual questions the market watchers and investors will ask. At the current moment, I would say that the momentum could keep going, given there's no really detrimental bad news. And until we get into the next earnings seasons, where the results of the companies being announced, we could potentially see correction if the results from the companies disappoint, or we could continue to see a strong momentum for the rest of the year if the results justify the performance and the stock prices.
Well, Kian Soon, let's turn our attention to China now. By recent standards, it's been a fairly quiet week on the bad news front for China as well, and we have seen some efforts from policymakers to try and perhaps talk up the stock markets over on the mainland, and I guess to a certain extent Hong Kong. We have seen a slight recovery, but what is your outlook here? Is this the light at the end of the tunnel, or is it the train coming the other way?
I think for the last few weeks, no news means good news, especially for Greater China area, because for the whole of last 2 years, we have been plagued with news about real estate bubbles, economic slowdown, so on and so forth. I think our position for China is pretty clear, right? If you're looking around for value stocks as well as value investments, China is as cheap as it can get. I think the question here is, does it justify the risk of investing in this region, which is really up to every individual's appetite? We have a strong allocation. As an Asia fund, we have a strong allocation in Hong Kong, China, because we think that, in terms of, from a value perspective, these two markets currently offer companies that are trading at single PEs, but yet having double-digit earnings growth. Obviously, this is not for every sector, not for every company, but if you look hard enough, you could actually get companies that are net cash positive, at the same time giving dividends of 7%, and it doesn't have any debts. And at the same time, it doesn't have all the risk exposure that, certain companies are exposed to. So I think if you look hard enough as an investor, you're looking to maybe, pick the best companies from a value perspective, I think currently Greater China and Hong Kong offers you that opportunity.
Some might say for the brave, but would you then characterize the China market then as an income investors market rather than a capital appreciation market?
We are seeing green shoots happening, as in the policies are getting, results, as well as, the overall stability of the markets have returned. At the same time, in terms of fund flows, there are return funds that are interested to invest in the markets again, given the attractive valuation. I think a couple of factors will add in the coming months as more economic data becomes available, as well as the companies earning, justifying, and strengthening investors' confidence. And if you have the couple elements coming together, it could be a start of a recovery for the Greater China markets.
Excellent. Kian Soon, thanks so much for speaking to us today.
You're most welcome.
Always a friend of the show. We've been speaking to Kian Soon, CEO of Astral Asset Management in Singapore on BizTech's Midday Market Watch. I'm Jeffery Halley.
And I'm Samantha Voon.
And this show will be on our website, www.biztech.asia, as well as our social media platforms. You can also see it on our syndication partners, TV stations, radio stations, and websites. Thanks so much for tuning in today.